I want to show you a price chart. The price chart's on the screen right now, and what you're looking at is the balance sheet of the Fed, of the US Fed. And you can see, let me get my little cursor out here, that the balance sheet, for the most part, pretty much stayed at $4.5 trillion from, call it, the beginning of 2015 all the way to the beginning of 2018. So all of 2015, 2016, 2017. And then in 2018, it started falling, right? The Fed started shrinking their balance sheet. They said, we're going to sell what we have. And when they sell that, they get dollars. So as this line falls, dollars leave the world because the Fed is getting paid in dollars when they sell their assets. And it's right around this time that the trade war also started. I think that might be a coincidence because the trade war officially started on January 22nd, 2018, which just happens, I think this is a coincidence, happens to be when the Fed starts to shrink their balance sheet. And they've been shrinking and shrinking. And let's just generally call it, I guess this middle number would be 4.45 trillion. And they shrunk it, or have been shrinking up until September 11th of this year. And they shrunk it down to, let's call it a little under 3.8 trillion. Now that might not sound like a lot, right? So if we round it, maybe we could just call it about $700 billion. But that's $700 billion of US dollars that have been sucked out of the system, right? Because that's what they get payment when they sell their assets. And so $700 billion of US dollars have left the system. But on September 11th of this year, not too long ago, all of a sudden the Fed started increasing their balance sheet. Well, that used to be called quantitative easing or money printing, or if you want to stay away from the jargon, as I like to do, the Fed is increasing their balance sheet again. Well, the last time they started increasing their balance sheet, was in '08, and they increased it about $3.5 trillion. And so to me, this is really interesting because if we think about what that's done in the past, meaning money printing has done in the past, we really have to go back to some core assets here. So you're looking at gold on the screen right now. And what do I have here? I have about 6 years of data. And gold did not like money printing because when the Fed printed money, generally speaking, people said, oh, everything's okay. The Fed's there, they're printing money. And gold went nowhere. Now, it obviously went somewhere, went sideways, up, down, up, down, up, down, up, down. So if gold breaks this kind of 1475 right here, if gold breaks below that, that's a pretty significant point. Now, it may not fall all the way below 1385, and I've had for a while a range that you see here, these two blue lines. So I'm not saying gold would fall below 1385, but man, if it breaks that 1475, I think it's because of money printing, not of trade wars. And I believe, and I kind of, hopefully not in a too hypey way, in my email said it's actually not the trade war, but really to me, it's maybe the war the Fed is having, right, to keep things stable. And they've fed trillions of dollars to the world. And now they're kind of pulling it back. They're shrinking their balance sheet. Until now, they're growing it again. Now, when they grow it, they sell the dollars they have and they buy other assets. So US dollars are starting to come into the market again. Now, if I go back to here and I go and say, well, let's look at the 10-year Treasury. Now, this is the yield of the US 10-year Treasury. The same time that gold peaked, most recently, the 10-year Treasury bottomed at about 1.45%. The 10-year US Treasury yielded at the point gold peaked most recently, had a pretty low low. Now, there's been a lower low back in 2016, but Again, I'm going to say the same thing, but with a different price chart. If the yield on the US 10-year Treasury breaks above 1.9 and gold breaks below 1475, to me, those are two clear signals that, in fact, money printing has started again. The world is going to start getting more and more dollars. Historically, at least over the last 11 years, when the market got more dollars, guess what? Stocks went higher, gold went down to sideways, bonds went down to sideways. And so I predict if, in fact, this is what's happening and the balance sheet is actually expanding. So that's not a prediction. But we have to wait, or we have to look for some other things. Now, the most obvious thing to look at is the S&P 500. This is the index of it, and it is this does not include dividends, but we're looking at 1.24% ish, something like that, 1.2, 1.2% from lifetime highs. When that breaks above, so it's very, very likely as the US stock market breaks to new lifetime highs, we're going to see gold break down. We're going to see yields break, US 10-year Treasury yields break above 1.9%. And if that happens, I really do predict that we could see the US stock market break higher about 40% into the first Tuesday of November in 2020. Again, predictions are fun. When you make a prediction, you also want to ask, how will I know when I'm wrong? What am I looking at to know if I'm wrong? And again, guys, this is information, right? It's kind of fun. Information is free. I don't necessarily show you this to entertain you. There's a lot of entertainment out there, though sometimes I can be entertaining in how I mess up. But what's most important is, great, you have this information, now what, or so what? And I think the answer that people are really looking for is shifting and changing their filter. So they filter out what doesn't matter and they allow in what does. And I put in the PS this week a great article about what the brain really does is one big filter, right? And the great thing about the filter is you can change it. You can change it. And filters are naturally shiftable and changeable. And the quick example is, if you ever got pregnant or your spouse got pregnant, you probably noticed the moment you found out you guys were pregnant or you were pregnant, all of a sudden, all these pregnant women were out there. Well, there's only one of two things that could have happened, right? Either A, the world just exploded in pregnant women all of a sudden after one day, or B, your brain shifted a filter and all of a sudden it was seeing things it wasn't seeing before. Well, the same thing can be done with investing and what is needed to be seen and what is needed to be filtered. It can be literally a switch of a filter. And that's what happens with my training clients. So if you find yourself curious, you can also look on the PS of this week's email, because I have a little fun thing there. I put a micro training together. And this is a bit of an experiment. It is a pretty powerful micro training. So don't let the phrase fool you. But for maybe the cost of a pumpkin spice latte from Starbucks, you can probably get thousands or tens of thousands or hundreds of thousands of dollars of insight/training from that micro training. So anyway, that's where my brain is this week. That's what's on my mind, both if gold breaks below a certain price, if the US 10-year Treasury yield breaks above a certain price, and this new war going on. And maybe the war was always going on with the Fed, and they are back to printing money, call it what you want, but their balance sheet is expanding again and has been expanding for a little over a month. And so we are absolutely in for a wild ride. Hey guys, I'm so appreciative that you're in my world, and this is just another step in helping you protect and grow your portfolio, your life, your future, your choices. Until next time, this is RC Peck.